Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment of Traders review. Today we're going to have a look at the fifth COT report of 2017, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got the New Zealand dollar on top of a list with a 39% change in commercials positions. We've got 38% change in large speculators. You can see these changes have moved commercials from a net long territory down into net short territory, and it's only the small speculators who are optimistic, or in other terms, net long about the market right now. This change, of course, is definitely huge, but we do see such changes in the past. And if you look at the chart, you can see how well the price of the New Zealand dollar reacted to these larger changes. And you can see there's nothing too unusual about it. Maybe this one was a good signal, a large bearish COT change signal just at this top. I wouldn't say this bullish one or the one afterwards was that good. So even though this change was large, I would recommend you to be cautious about just acting on that. Always look at the COT Extreme, what we're just going to jump to right now, and you can see a more wider perspective about the market. You can see that we're moving away from a relative bullish COT Extreme that happened just over here at this bottom. You can see how well the price of the New Zealand dollar reacted to that bullish COT Extreme signal. And we're moving towards the bearish side of the market. Of course, there's plenty of space left to reach those really large bearish COT Extreme levels. So this rally may easily continue for many weeks or months to come. Our next market is soybean oil, where we have a 24% change in commercials positions. This is a bullish COT change signal. Again, we're talking about a very large one, of course, compared to the changes that happened in the last 52 weeks range. You can see on the chart it's definitely much greater. It may affect the price of the soybean oil market in the next couple of days. Opening a 5-year chart, you can see that in this case we're moving away from bearish COT Extreme levels, and as we do so, you can see there's a steady decline in this market. There's still a lot of space for this extreme to go towards its bullish extremes. You can see that the last one was over here back in mid-2016. It wasn't an all-time, of course. It was a relatively large one compared to the previous extremes, but still it was an effective signal back then. Lean hogs, our next market, with a 20% change in commercials positions. You can see the change size over here, a huge one, 50% in small speculators. But look at the chart. We find that there are similar changes happening a couple of times throughout the year. We shouldn't be that surprised, and it's a very volatile market sometimes, of course. So we have a bearish COT change signal happening after prices are steadily going higher and higher. If we open the 5-year chart, you can see that the last major extreme here was a bullish one at a very, very good point in time. You can see this bottom, and that's when we received this significant COT Extreme, the bullish one. And since then we see a gradual decrease in commercials positions, meaning they've gone from a net long territory and now they're building up their net shorts. And of course, large speculators, on the other hand, are building up their net long positions. And for how long can this go? It's of course hard to tell, but you can see that there's a lot of space here as well for traders to build up their net positions. Moving on to large speculator COT Extreme, we've got crude oil on top of a list with all-time COT Extreme, not only in large speculators but also in commercials. This extreme was present last week. It just got a bit high. It just got a bit larger. This can go on for many weeks before we really see a reaction from the price. You can see that prices could not go any higher from these levels, so maybe this is a good signal for us that this is a top, as it may have been the case over here. You can see that wasn't, of course, an all-time, it was just a relative COT Extreme, but the picture, the price of crude oil happens to be very similar to what we see over here. That's that. Moving on to cocoa oil, where we have a 241 report extreme in large speculators. Here we go. And of course, jumping to the 5 years chart, we can see this extreme on a wider perspective. So here we go. It's a very strong COT Extreme, of course a bullish one, as you may see, and you can see how well prices reacted to these bullish COT Extremes in the past. So again, I think this is a good opportunity for us to take this market into consideration for a trade. Prices are very low, and if you look at an even wider perspective, you may find some technical support levels that can give you a good stop, for example. But let's move on and have a look at live cattle, where we have a 111 report extreme in the market. In large speculators positions, here we go. You can see it is a significant bearish COT Extreme coming after a couple of weeks or even month of rise in the price of live cattle. So maybe we have reached a top. We may have to have a reaction, or possibly we could go back to this downtrend that has been on for or since the end of 2014. You can see on the chart over here, which, by the way, was actually well signaled by this COT bearish extreme that we got from the COT report. So that is all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great week. Take care. Goodbye.